The final category, which is my favourite, are the non-property investments. And needless to say, even though you know, the lion's share of valuations we're wrestling with are property related, plenty of funds have these you know, unlisted trusts that do property development and commercial properties and whatnot, or startup ventures, or you know, private companies doing all sorts of, you know, unusual things. The valuation rules also apply to them as well. They're not outside of that. And again, typically, in most cases, this work is coming to us and with no valuation. Well, in some cases, no valuation even being attempted, and it just slows down the process. We'll have to go back and say, look, sorry, you know, we need some figures to support the values in the balance sheet. And this can be very frustrating for accountants. I mean, the typical question we're getting is, look, you know, how do we solve this? How can I give you a value for this entity? And fortunately, there's a whole bunch of different ways of solving it. Within the ATO valuation guidelines, there's actually, it implicitly suggests that you can also use there's another separate set of guidelines, you know, valuation guidelines, but for tax purposes. And within that, if you go and have a look at those guidelines, it's excellent, and it gives you know, a taxpayer multiple ways of coming up with a tricky valuation. For example, they can use an income-based approach, which is essentially just bringing forward the future economic benefits. You know, your classic sort of discounted cash flow type methodologies, or it can use a net asset-based approach. So. Yeah, there's a bunch of different ways of doing it, and typically these types of techniques they're right up the you know, the skill set of accountants is perfectly suited to you know, solving this, you know, this dilemma. And what we have found is when we explain this to accountants, say, look, this is how you can solve it. They can typically go away and they can you know, talk to the directors of the trust company or the you know, or the startup, and they can actually put some meat on the bones. They can actually go ahead and say, well, look, this is our future projections of income.